to talk about advances today because we're actually getting a very important wedge pattern here in the charts. So I'm going to give you guys a gem here. Anyways, remember, I'm not a financial advisor. None of this is financial advice. Let's get straight into it. And look, guys, we are going to talk about this because we are setting up for another breakout here inside of advances. Yes, you heard it right. Another one. So this has been happening so often, but see, this time it is not 100% confirmed. It's not 100% confirmed whether or not we're going to have this breakout because this is supposed to be a symmetrical triangle, right? That is what this wedge pattern is supposed to indicate, but really it's supposed to be starting here. So this wedge pattern is supposed to start right here, but it's starting back here. So this might not be a confirmed bullish confirmation. So we have wedge patterns here, and typically a symmetrical triangle is supposed to be bullish. But look at how the symmetrical triangle starts. You can kind of see it's starting a little bit differently here, which kind of leads me to think this might not be a bullish one, but we'll have to see. But we're definitely in a symmetrical triangle. Aster has just now been listed to Avantis, so that's pretty good. We're doing pretty good things here with Avantis and everything. And also with Aster, I just now made a video on Aster as well. So if you guys want to go trade you some leverage on Aster, you might have some potential to make some money. But anyways, let's get off of Aster for a second here. Let's talk about advances. So we are waiting for this wedge pattern to play out here currently. We've had so many nice pumps inside of advances. The call that I made initially on advances helped a lot of people out. A lot of people made money according to that call. But right now, we are waiting for the next breakout here. So what could be happening next inside of advances? Well, first of all, our indicators are all mixed. All of the indicators for every time period of advances are mixed. Now I'll show you what I mean by mixed. There's no confirmation. There's no bullish confirmation. The only confirmation we kind of have is like a bearish confirmation a little bit, right? We have a bearish confirmation here on the MACD for the 4-hour chart because all of the selling volume, all of this is selling pressure. But you have to also remember, regardless of all that selling pressure, we still have had a lot of pumps within this area here, right? Regardless of all the selling pressure on the 4-hour chart. So anything that we talk about can be invalidated. Anything that we talk about can be invalidated because right now, Avantis is pumping off of pure hype. This thing has been going crazy. And at first it was the technicals, but now it's pure hype. And I'll show you exactly why. Look at this. This is like a neutral chart right here. So this is the percent R trend exhaustion. The blue line on the percent R trend exhaustion tracks the long-term trend. The white line tracks the short-term trend. And notice how both the long-term trend and short-term trend are kind of undecided. They don't know whether or not they want to go down or up. And the long-term trend is right in the middle. The short-term trend is right here at the bottom. Almost looks like it wants to go up, but it's not sure. So it's undecided. So we literally have zero confirmation for a bullish rally here with Avantis. And you can see even here on the MACD for the 1-hour chart, still not much buying pressure, not much selling pressure either. So it's very, very neutral. If you look at the 30-minute chart, you can also see the same thing. Buying pressure keeps coming in, but then it keeps getting hit by selling pressure, but it's still very neutral on the percent R trend exhaustion. They're both still very neutral, but facing more towards the downside because you can see both trends are going downwards. Both the long-term trend and the short-term trend are going downwards. So the only confirmation that we technically have is bearish. And then we can come over here and then we see this, and then we see more selling on the MACD for the 15-minute chart, which is very short term. And then you can see more selling here on the percent R trend exhaustion. So we can't even look at the long-term chart because it hasn't been out long enough to look at that. So you can see here, we can't even make a confirmation here. So our only hope is to look at the 30-minute chart and speculate. And what I'm speculating on right now is this symmetrical triangle or a possible symmetrical triangle, because a symmetrical triangle really should have started here, but there's no way it can do that because then it's not a symmetrical triangle at that point, because then it breaks the trend of the triangle, right? The only one that doesn't break the trend of the triangle is when you bring it down to the bottom of this wick down here. That's the only time we can look at it like, okay, now it's technically, it could be seen as a symmetrical triangle, but then again, we're kind of stretching it here. Like literally, we're stretching this triangle, literally. So it's a stretch, but you can see that there's an actual trend being created here, and it's touching the trend line multiple times, which kind of confirms that it is a symmetrical triangle. So it's funny because we can't technically confirm it because it just isn't formed the proper way. It should start right here, but it's starting all the way back here while the top area is starting up here. So you see why I can't necessarily confirm that this is a bullish symmetrical triangle, right? So that is the issue that we're running into right now. So this is my plan here. I'm looking at this like, okay, if we break out to the upside, we will immediately hit the $2.42 area, probably do a little bit of a pullback here, and then probably take off from there, right? So that's one option here. The second option is we pull back and then have some like bear trap type of thing where we either go down all the way or halfway to about $1.80 and then bear trap everyone and keep going, or we pull back down to $1.60 and then we continue to go and still bear trap people and keep going. But right now, Avantis is going off of pure hype and nothing else. Right now, it's just pure hype. So I'm really expecting a move to happen pretty soon here too, because it's squeezing here into this wedge pattern. It's squeezing into it. So personally, I think that just because based off of the pure hype that is going on with Avantis, that we are probably going to break out towards the upside just based off of pure hype. But technically, it's very, very neutral right now, but leaning closer to the bear side. So technically, neutral, leaning closer to the bearish side, but fundamentally, with all the hype we have, completely bullish. Fundamentally, with all the hype, right? That's pretty much the analysis here. But right now, we have no confirmation. So I do think that it will go to the upside though. So that's what I'm waiting for. So right now, if y'all are thinking about buying and you haven't bought, you should probably wait. But if you're already holding it, just chill and let it do what it does. Just let it move. Now, if you're looking to buy in on the dip, let's say you already sold because you sold out up here and you're just looking to buy in on the dip, or you haven't sold yet and you still want to buy on the dip, then I would say $2 isn't enough of a dip. You really should have bought down here at $1.80. I noticed a lot of people in the comment sections on my previous video saying that they did buy at $1.80, so they did pretty good. But if it pulls back further, then that's when you're going to want a dollar cost average. But yeah, you should have did it back here. At this point here, everyone should be waiting. You shouldn't be doing any drastic moves because the upside potential is not as big as the downside potential. There's a lot of downside potential, especially with how much it's pumped recently. There could be a lot of downside potential, but there's still a lot of upside potential. Look at the trading volume. It's also going down. It's at 1.4 billion. The trading volume was very high recently, 6.9 billion when it was up there at $2.40. So it's dropped tremendously. So there is a possibility that we can crash just based off of not having a lot of trading volume. The last time we had 1.4 billion trading volume, we were at $1.41. So technically with this volume, we could pull back to levels similar to $1.40, technically. And that's why I said technically we're bearish. Technically we should be pulling back and kind of getting ourselves settled in technically. But fundamentally it's going based off of pure hype, right? So technically we should see $1.60, right? And then breaking out from there. But yeah, we'll see. We'll see. Fundamentally, this thing could keep running and running and running and running. So yeah, if it doesn't hit $1.60, then I guess We're just going off pure hype still. But remember, if it continues to pump and it does not pull back and stay back for a little longer, the pullback is going to be even harder in the future, right? But anyways, this is all I got for you all today. Remember, I'm not a financial advisor. None of this is financial advice. Definitely hit the like button, subscribe, leave a comment in the comment section, all that good stuff. As always, I'll be back with another video.